Welcome to Dezan Shira&Associate's series of podcasts. My name is Cynthia from the Beijing office. With me today is Chris Devonshire-Ellis, founder of our firm. Dezan Shira&Associates is a specialist foreign direct investment practice, providing corporate establishment, business advisory, tax advisory and compliance, accounting, payroll, due diligence, and financial review services to multinationals investing in emerging Asia. Since its establishment in 1992, the firm has grown into one of Asia's most versatile full-service consultancies with operational offices across China, Hong Kong, India, Singapore, and Vietnam, in addition to alliances in Indonesia, Malaysia, Philippines, and Thailand, as well as liaison offices in Italy, Germany, and the United States. Today we'll be talking about double taxation agreement in Singapore. What are DTAs and how do they impact doing business in Singapore?
Well, DTAs limit or eliminate entities from being taxed on the same income or capital by two different tax jurisdictions. And Singapore has remarkably advanced in this out of all the countries in the world. It has a comprehensive set of double tax agreements in place, over 70 of them, a majority of which are applicable to both income and capital, which makes it an ideal jurisdiction for basing holding company operations, particularly when targeting Asia. It also has favourable tax and legal systems in Singapore, and as I mentioned earlier, its destination to access ASEAN and other Asian markets, especially China and India. It makes it a very business-friendly environment. In terms of qualifications for DTAs, our website ASEANbriefing.com contains complimentary downloadable copies of all of the DTA that Singapore has signed. As I said, there's over 70 of them, so most well-developed countries have such relationships with Singapore, and you can check those by looking at the ASEAN Briefing website. So look at the different countries that have DTAs with Singapore and treaty partners and see if your own country has these. If it does, and the majority of them will, then companies can obtain a certificate of residence if they set up an operation in Singapore from the Inland Revenue Authority, and this is the stamp of approval that the company is based in Singapore and can then start to access the benefits of the applicable DTA. But to obtain the certificate of residence, the control and management of the subsidiary company must be exercised in Singapore. And these include directives issued by the Inland Revenue Authority of Singapore. Board of directors meetings need to be held there, other related companies in Singapore, and at least one executive director needs to be based in Singapore. And if this is achievable, and most investors coming into Asia will not have any problems in meeting these criteria, then the Singapore DTA agreements with the parent companies jurisdiction can then start to come into effect. The benefits of DTA is that they can reduce withholding tax charges on things such as royalties, on management time and fees, which can be between the two entities, the parent company elsewhere and the Singapore subsidiary. So they can also be used as a mechanism for reducing the overall tax burden. In order to do that, relief is granted via two methods, the credit method and the exemption method. Now, Singapore's credit method grants foreign tax credits to entities that have paid taxes on their income derived in the source state. The entity can then offset its tax liabilities in Singapore using these credits. The exemption method is when the entity has already paid its taxes in the source state and therefore will be exempt from paying tax in Singapore altogether. So these are highly valuable items, and as I said, we work extensively at Dezan Shira with tax planning and the use of double tax agreements that are in effect for our clients, and I have to stress that the tax savings on using double tax agreements can be considerable. It should be part of any business's overall planning and structural planning when considering investment into Asia. So DTAs are very, very useful. We work extensively with them, and Singapore as a base for Asia has an extensive network of DTA, one of the primary things that runs in Singapore's favour.
Thank you very much, Chris. Your insight on this topic is very valuable. Thank you for joining us today. For further insight into regional economic environment in Asia, please visit our publishing subsidiary Asia Briefing at www.asiabriefing.com. Here you can find news, commentary, magazines, guides, multimedia, and more, which help guide foreign investment in emerging Asia.